For this question, we have to calculate minimum taxable capital gain to be reported by Jane on the sale of the two properties. Jane acquired a home in 2001 for 300,000. In 2003, she acquired a cottage for 150,000. She lived in the house in winter and in the cottage in summer. In 2005, she sold both properties. She received 400,000 for the house and 250,000 for the cottage. Now you have to be living in order to capital gain, you have to be living in one of the property during the year. You cannot not live in the cottage for the whole year and do the capital gain deduction. That would be your property income. For house, you have to live in the house during the year. For the cottage, you have to live in the cottage during the year. Okay, so let's see. She had a house. I'm gonna make two columns. House, and she had a cottage. Now proceeds were for the house. Proceeds for the house 400,000, cottage 250. 400,000 and cottage is 250. 0. 250. I got one extra 0. 0. Her ACB was 300,000 and for the cottage 150. Is 300,000, 300,000 and 150, and her gain is 400,000 minus 300,000 is equal to 100,000. For this cottage, it's 250 minus 150 is 100,000. Let's make a timeline. She lived from 2001 to 2002. 3, 4, and 5. Okay, out of that, she lived in the house for 5 years. And cottage, she lived 3 years. Cottage, she lived for 3 years. Total years was from 2001 to 2005, 1, 2, 3, 4, 5. 5 years in total. So the maximum you can do is 5 years. Since she lived in the, we'll calculate the cottage first. We can add 1 year for either calculation, house or the cottage. So she lived in the cottage for 3 years, 1, 2, 3. So 1 year we're given extra. Extra year is 1. Lived for 3. But since we're given 1 year extra, we can use 2 here, and total lived for 3 years, and total years logged. total lived is 3, and we're going to use is 2. Okay, so that would be 1 plus 2. The formula is this: 1 plus this is 2 divided by total years lived 3 and times it by the gain. That is the formula. Okay, so this is cottage. I'll put cottage here, and I'll put house here. So same thing for house. It is going to be 1 plus, now how many years did we designate to the cottage? 2. So we total had 5 years. So since we gave house 2 years, we have 3 years left. So we're gonna put 3 over here. 1 year we get extra year, 1 year, and we out of 5 we give 2 years to the cottage. So out of 5 still have 3 years left, and then we are going to divide it by the total number of years we lived in the house is 5 years. So divided by 5 times it by the gain, which was 100,000. Okay, just gonna put this formula for the cottage first. Cottage again, it's say 2 brackets, 1 plus year used, which we're going to use 2 years. Then we're going to divide it by total years lived and times it by the gain. Okay, what is the error? I used 2 brackets. It's 2 brackets, and I did not close this bracket. No, I did. Let's not close this bracket. Okay, so it's 100,000. That is the principal residency is the exemption for the cottage. Now I'll do the house. House is the same thing. We are going to do, okay, so for the house, let me put a house here. Sorry. So house, we are going to use extra 1 year. Years we used this one for 5 years. Okay, we lived in the house for 5 years. Years we're going to use, since how many years we have left? Out of 5 years we gave 2 years to the cottage, so we're going to use 3 years over here. So all together we have 5 years. We give 2 to the cottage, and we have 3 years left. So for this I am going to add the formula, which is again 1 plus 3 years, which we're going to use, divided by total 5 years, and then times it by the gain. Let me actually close the bracket here, and then times it by the gain. That is 80,000. So after the exemption, we have our gain was 100,000. We're exempted 80,000. We're total capital gain. Capital gain is 20,000, and and for our cottage, our gain was 100,000, our exemption is 100,000, and we get 0, nil. So our taxable capital gain is, of course, 50%. 50%, so that is going to be 20,000 times 20,000 times 0.5, $10,000. Our taxable capital gain is 10,000. Okay, but now let's see. This is actually the whole question is done. But let's see. Rather than, if we give house, let's say we give house 1 year, and we give this cottage 1 year and the house 4 years. What happens? So 1 plus the 4, what happens is we get a deduction for 0 for the house because we use full amount, but we have capital gain of 33,333, which we times it by 0.5. So this is this times 0.5. Now we have a taxable capital gain of 16,000, which is more. That's why we don't do 4 years. First, we're going to give the cottage 2 years. So cottage capital gain deduction would be 0. So taxable capital gain is over here, is that, and whatever the year we have left is 3. And this way, our taxable capital gain is 10,000. It's better to do this way. If you want to save more taxes, you have to do this way. Again, you can do it the other way, but you do not save most of the taxes. Give total exemption for the house. We have 3 years, we live there 5 years, we're going to give it 4 years. With 1 extra year, we get 5. So our deduction for the house is 0, but since we give 4 years, we can only give 1 year to the cottage, and our total taxable capital gain is more. This is not the right way to do it. Right way to do is 3 years to that and 2 years to that.